Man, we are back. Are you ready to kick this thing out, brother?
Let's do it, buddy.
Let's do it.
Welcome to the AdminisTraders Podcast, featuring your host, Mr. Kendrick Thomas, and my co-host, Mr. Jose Ortiz. This information is used for educational purposes only.
Man, it's so fun to be back, man. I tell you, happy Monday, y'all. How y'all feeling out there tonight? What it do? What it do, Jose?
Wow, it feels like it's been forever.
Look, man, I'd say so, bro. It's been a while. It's been what, 2 weeks, 3 weeks?
2 weeks.
And a whole lot of money in between.
Got a little under the weather.
Look, man, spring break. We just came off spring break. Getting back today. If we look like we are tired, it's probably because we are. You know, spring break. Look, it was real. I hope if you are educated, you had a great spring break today. Last week, and you kind of coasted through today. I hope nobody was able to you got to slide back in that thing after you've been doing it so long. Them first year teachers probably was fired up this morning. Them veterans like, nah, man, let's slow play this time, man. Look, man. So what's been happening with you, brother?
Man, nothing, man. I'm just, trying to shake off that little sign of stuff I had a couple weeks ago. And, man, just, I had a good time over spring break, man. Made a little bit of money.
They said you get you some castor oil, man. That's how it work every time, bro. That's all you need, man. Little castor oil, little Dr. Tension antiseptic. Look, man, just gargle. You're going to be straight, bro. And if it don't work, you might could drink it. I don't know for sure. No COVID, bro. But look, I think I drank some in my lifetime, man. Grandma had it. So, man, looking forward to getting into this show today. So much good stuff got going. We got the heat check. So many sectors are popping out. We got Uncle Jerome coming in wait a minute, 2 days? Wednesday. Woo! So we got Uncle Jerome coming in Wednesday. It's gonna get crazy with that. Shoot, man, we got a lot to talk about, man. So let's get into the show, brother. Jump into some news. So let me make sure y'all can see that here. I'll take off the frame. All right, so with this, if you have been under a rock and you know nothing about life, then I will tell you this is Jensen Huang, the CEO of NVIDIA. NVIDIA has been in the game for a while. Just recently, though, NVIDIA has made a upward hike from, I remember buying this at 122. And so NVIDIA is now like $800, $900. So man, do you know about what they did today about the chips, or you want me to kind of break this thing down, Jose?
Man, go ahead, break it down for everybody. I know.
All right,
they had a massive conference that started today, and they, talked about the new revolution of artificial intelligence and what they were going to be part of. And so as KT explains all that, then at the end, I'll kick it into some crypto, that is related to this NVIDIA news.
Man, it's crypto crazy out here. So once again, this is the CEO of NVIDIA. So they had the NVIDIA GTC Artificial Intelligence Conference. And with this is in San Jose, California. So today they announced chips, right? They have a new chip that's coming out. So I'm summarizing this for y'all. But they have a new chip that's coming out, AI graphics processor named Blackwell. And so the Blackwell chip, which is called a GB200, will ship later this year. It's enticing customers with more powerful chips to spur new orders. So what he says is the Hopper is fantastic, but we need bigger GPUs. And so what are they doing? They're probably going to come out with bigger GPUs. that we have to get. So the sellable commercial product was the GPU and software was to help all people use the GPU in different ways. So he says, of course, we still do that. But what's really changed is we really have a commercial software business now. I want to kind of make that point to say chips are the future. Like so many things are about to be reliant. I remember when the pandemic and there was a chip shortage, and there was a car shortage, and there was so many other things that we just simply couldn't get because of the chips that they depended on. I think it's about to get worse, but the company that is first in line and more innovative like NVIDIA's, I think they got a price raise today from maybe 1020 to 1200. So look, man, chips are here. NVIDIA is here. What you think about
it? You know, we've been talking about semiconductors, especially NVIDIA, AMD, all those for a while. I think that's where the future is, especially when it comes to this artificial intelligence, because it's all going to have to start from somewhere. Google today announced a partnership with Apple, or allowing the Apple phones to have integrate that Google. That's also going to be with AI. Yeah, NVIDIA's got a couple partnerships that they announced today. But I think what my curiosity was piqued was, we've been following crypto for a long time. This artificial intelligence trend in crypto and in stocks is on fire. And so if you followed us a while back, we mentioned a couple of names in the crypto sector that dealt with artificial intelligence. Some of them have run 200, 300%. So I want to drop a couple of names here that are in the process of or in the business of working with GPUs on the crypto side, because that's really something that crypto is not known for, because crypto, you never think of them as being something that is physical. But there's a few companies out there that have gone into physical infrastructure, and companies that are looking to partner or have partnered with NVIDIA. And one of those is Golem, GLM. You can buy it on Coinbase right now. It's dipped down to 50 cents with a market cap that's kind of low. So I think it would run to $5-6 soon. Another one is Render, RNDR. It also announced an exclusive partnership with NVIDIA. So they are at $11.90 today, but they ran all the way up to 15, so they're kind of dipping down a little bit. I mentioned this when it was $6. And so I think that as people, really hear about Render and Golem, I think it's something to catch on. Remember, the one name that we dropped a while back was FET, and it is now at around $2.80. When we mentioned it was 22 cents. So just make sure that you keep up with some of the names that we drop on the site or here on the podcast. So, that's it with that. But, NVIDIA is going to be around. And if the idea of what they're doing with artificial intelligence, everything's a fad when it comes to stock market, when it comes to business cycles, flow of the market. Just remember that it comes up, it goes down. What we're hoping is that AI can be something that's not just a fad, where you get your AI goes up, your stocks go up, NVIDIA goes up, but we dip according to pullbacks, not according to flat out, it's time to get out. Because if you've been in the stock market for a while, we were there for the metaverse. We were there with the hype. We were, Facebook changed their name to Meta.
Yeah.
Crypto exploded at that time. But now all those meta cryptos, all those meta stocks, metaverse stocks have kind of plateaued back down to reality. So we're hoping that AI doesn't do that. Yes, it's normal to dip. Yes, it's normal to pull back. But we hope it doesn't go all the way down like those did when the metaverse was a big deal.
Look, man, I still own my URLs for the metaverse, man. I got 2 of them that I own, bro. And I keep on renewing them because one day, well, it's like Metaverse Houston dot something and Houston Metaverse dot something, bro. Like, say, one day somebody gonna have to pay me for them, man. I'm out here buying this real estate.
You ain't lying. Well, and just to go back with that too, I was a big fan of the metaverse. I bought a 22-cent metaverse gamified crypto called Sandbox. I still own it to this day. When I bought it, it was 22 cents. Today it is 70 cents. However, when the metaverse craze hit hard, it went all the way up to $8. So,
oh man, what you diamond head? Yeah, that was one of those used to. That boy used to win sell nothing, man. I'd be like, come on, man, sell that shit. Look, but now it's a whole different story, man. So basically, that's it, people. We're gonna wrap up that news so we can get into this heat check. Really thinking about what's going on with the chips. Right now, I believe they are a little high. And so let's see what happens as far as when we get the pullback, especially after Wednesday, because Uncle Jerome is out here. So when Jerome is out in the streets, you got to be quiet. You got to wait. But after Uncle Jerome speaks, we see what happens. Then that's when you kind of start plotting your plan on the chips, because while we may think they'll pull back, if Uncle Jerome comes out and says the right thing, we going to the moon, right? And so we don't just front run it. We react to what happens. But you better get at your plan. That's why we dropped that news, so you can make sure that you're able to get into those chips or whatever it is before everybody else. All right, man. I think we'll take a quick break, and then when we get back, let's get back into these candlesticks, man. Come on, baby.
You see the drip, yeah, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drip, yeah, I'm fitted up. Hop in my car and the
Are you ready to do this, brother?
Man, I'm ready.
Woo! Look, man. All right, y'all, we're back. Let's get back to these candlesticks. Jose, I'm gonna bring us up. Hold up, wait a minute. Let me take the banner off. Okay. Now, let's see if we can make it
oh yeah, that's nice.
Okay.
So guys, basically what we're going to do tonight is I'm going to take you back to a little bit of what the candlesticks look like, what they were. We got a little bit of feedback on what you guys want to see, and then I'll go into a new candlestick pattern. But I really just want to break it down for you one good time how traders use candlesticks. So, it's a type of price chart used in technical analysis to present the movement of an asset's price. And it's at a varied time, such as minutes, hours, days, and it provides key pieces of information, open, close, and these prices for a period of time in which you have that, or that candlestick is for. So it's made up of 2 parts. We've got the body, and then we've got the wicks and the shadows. And so as you can see here, we got our candlesticks. Now, the one thing that the candlesticks are going to be the same, whether they're red for being bullish red for being bearish or green for being bullish. But what I want you guys to notice the difference is that when a candlestick opens at that particular time frame and the stock price goes up to the next close of that time frame, that is when your candlestick went up, it filled green, and it's bullish. So if you can see, the open is at the bottom and the close is at the top. So that's critical to know which direction that candlestick is moving. Again, the top of the candlestick, if it's green, is going to be the closing price for that particular time frame that you particularly chose. When it opens, it's green, and so there you go. For the red, the bearish, I'm sorry, it's the opposite. You have your open price for that time frame, but then it drops, it goes down, and so when it goes down like that, that's when you can see that the candlestick is actually going down in the price. The price action is actually down for that particular moment in time that you've had it. So now as we move on, might have to move that picture. So the lines extending from the top of the bottom are called the wicks. So if you notice where you got the arrow from the close to the high and from the open to the low, those are the wicks or the shadows of the candlestick. They represent the highest and lowest prices during that time frame. So whatever that low was, was usually right when it opens, and then that high at the end of whatever time frame you chose. Remember, if it filled upwards, we got a bullish candle. If it filled downwards, we've got a bearish candle. The top wick extends the top of the price to the body at its highest price, and the bottom is where it was at its lowest price. So here you can see what this looks like in an actual chart. You can see the various green candles, red candles. You can tell, like I said, your green candles had a high open, and then the close of that candlestick during that particular time frame was lower than when the price opened for that particular time frame. Now, open and close doesn't mean what it opened up for that day or what it closed for that day. I think one of the things that I was confused with for a certain time was that's what I was thinking. But it's if you pick a 1 minute chart, a 1 minute candlestick pattern, 15 minutes, 1 hour, that's when that candlestick is running, not the whole day. So that one particular candlestick is going to be running for those minutes. So if you opened up at $80 and you closed in that 1 minute at $85, you had a $5 gap up. It filled. It's going to be green because your price was higher.
Hold up, and what I want to do is let me see if I can. I wanted to see if I can try to. Let me see. Stop the screen. And so I just wanted to kind of illustrate that real quick. So right here is a 1 minute chart. So as Jose was talking about, this candle opened at the bottom for 1 minute. It went here, closed. Then another minute. This one here, another minute. Each candle. But then if you go here, where you go to 5 minutes. So now this candle opened. It took 5 minutes for it to get here. And then another one opened here. The lower the time frame, the faster you're trying to trade. So you're coming down 5 minutes, 15 to 5 to 1. Then you're trying to day trade or either swing trade. But other than that, you get up to your hours. So with these, like Jose was saying, this bar right here took 1 hour to fill. And so then you have to wait the full hour to kind of get that direction. And that's kind of when you're looking for bigger trends. All right. Sorry about that, brother. I just wanted to.
No, that's good. And then I saw a little hammer on that pattern for CrowdStrike that we might want to go back and use that.
Okay.
So like KT was saying, this is your chart. He showed you a live example of the 1 minute, the 5 minute, the hour. And so get familiar with overall just the chart patterns, to understand the price movement. So next, again, when that opening price is lower than the closing price, you're going to have a bullish candle. Your direction is going to be good. If it sustains that momentum for the next candlestick, we could see a trend to the upside. Remember that opening price is for that time frame. So if it's 1 minute, You have your opening price, and then in 1 minute, you'll have your closing price, and then everything in the middle is your body. And so, your top wick or shadow is considered the high, and the one at the bottom is the low for the day or for that time frame. So now next, we'll look at a bearish candle. So the big difference is that your opening price is at the top. When that 1 minute, 5 minute, or 1 hour pattern or time frame opened up, instead of it going up, that price action moved down. So for that 1 minute, it went down and it filled red. And so that's the biggest difference of the two candlesticks. They're still going to look the same. They're still going to have the body. They're still going to have the upper and the lower wicks or shadows. But, if it's red, that means that opening price for that 1 minute or whatever your time frame is, it went from high to low. And so it's one good thing to pay attention to those. In particular, if, like Kendrick said, if we're day trading, you want to look at those on the 1 minute to see where you're at, to see where your potential to get in and to get out is. And so candlesticks, they provide a visual insight into that price action, trends, reversals, and overall market sentiment. And so this week, I want to talk about the hammer. And the hammer is called a hammer because it looks like a hammer. If you watch Marvel, Thor got a hammer. Looks like that. Handle, top, you're about to go sledge away. And it is a bullish candlestick. It signifies a reversal, but it doesn't always have to be green. It doesn't always have to be green. Okay, so what does it look like? Well, we have a small body near the top of the candlestick, very small. If you looked at the candlesticks from previous, the ones that we just showed you, they were all long, and but this is a little one that has a top that looks like a hammer, and the long lower shadow or wick is usually 2 times the length of the actual body of the candlestick. So what does that look like on a chart? So if you can see, if you see at the very end, we've got a hammer. But before it, though, we have 4 red candles. So and then, before that, we've got a green one. And then before those, there was 3 red candles. So if you look at those candles, those 8 candles going from the start, it was in a little bit of a downtrend, depending on whatever time frame this is. And then you see that we have a hammer curl. What the working out? You got a hammer candlestick. So it, like it just said, it's a bullish trend which signals a reversal. So now we can actually see it on this chart. This next chart, you can actually see where the price action was in a downtrend. You see the arrow going down. You see all the red candles. Your pattern, if you were to draw that top line, is going down. Then all of a sudden we see a hammer. If you notice, the hammer isn't green, it's red, but it's followed by an uptrend. So usually when you see a hammer curl, a hammer candlestick, you're looking at a reversal from a downtrend. So if you spot one and then you see some green candles, after that, if you've seen that hammer, then you can tell that it's going to reverse and we're going to start an uptrend for that particular stock.
Also, I want to point out too, if you're paying attention, so just thinking about these candles, they are stories, right? So started out green, boom, sellers came in. So we come back over here, boom, okay, sellers come in a little bit, sellers came, sellers are here. It's a little fight here. Then the sellers show back up, boom, boom. But look here, the pressure started to stop right up here, right? Because look how small this candle is. So then you say, okay, not as many sellers. Then what happens? Bam, automatic reversal. So once you start being able to learn the story that these candlesticks are telling you, it's easy to realize what this means right here. All right. I think that okay.
Oh yeah. Okay. So traders look for confirmation. We're big on that word confirmation, because you don't want to just get in thinking that something's gonna happen the way you want it to happen. So you have to look for the confirmation of that signal, of that candlestick, of that pattern. And one of the biggest things that we look at when it comes to it's the volume, whether it has a resistance level, and in future podcasts and even on our social media, we'll get into what support and resistance are. Even talk more about what bullish and bearish means. But that's one of the reasons why we use the candlesticks, is to tell what's happening, and like KT said, what story is being told. You never look at one particular candlestick and just be done with one particular candle. You have to be able to look at, okay, I spotted the hammer, but what's next? Is it trending now up? Because I spotted it. Was the next candle going up? And if so, here's my reversal. You got to be able, if you are day trading or trying to flip something really quick, you have to be careful on when you identify that pattern and see that reversal. If you are a long-term, or if you are a swing, what we call swing trades, where you keep them for a week, a month or so, you're still looking at that pattern, but now it's a little bit further out as far as your time frame that you're using. And it's a skill that you learn, because it took me a while to get into actual looking at a chart and glancing at it and saying, oh, that's a downtrend, or looking at it, oh, it's in an uptrend. And so it takes time for you to actually sit and learn it and study them and watch videos and watch it live action when you have a chance to get on your phone, get on your computer while the market is open, and watch these candlesticks form, in real time is truly, it's amazing. It's pretty, once you can start identifying what the next move might be, your skill set, advances, but when you're trading and you're looking to get in, those are the things that I look at when it comes to, well, when can I put my money in? Because I'm not going to necessarily do it for the moment and day trade it. I'm going to hold it for a little bit, but I want to know where I get in. But like we've also said before, you're looking at the pattern, but you're also looking at the RSI. You're looking at the MACD. So if you go back to the previous podcast and look at, well, what was RSI, relative strength index? What was the MACD convergence? Your 20-day EMA, or your 16-day. But you have to be able to use those in conjunction with each other. But candlesticks are it's the first thing you see on a chart.
That's it, bro.
You don't have to have the rest of it.
Say, man.
But
look, man, I feel like you dropped it on us today. I like the way that you highlighted just that one candlestick to let them know that's the beginning of the change for the hammer stick. So, hey, big shout out.
Hammer
big shout out to you, man. Hey, man. Yeah, hammers. Yeah, that's what I meant to say. So what we'll do, y'all, we're going to take a quick break. When we get back, we're going to go into, see, I switched it up on y'all tonight.
Yeah, you did.
Now we're going to get back into our heat check. And then after that, I want to go back to that crowd, because we're going to put all of what he was talking about. Plus, we'll look at some of the indicators I use. So Jose talked about the RSI, the MACD. So we'll look at my chart, and I'll show you a little bit of the 8, the 13 that I use, as well as the VWAP. We are very trendy. We'll be right back.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
Bam! Right there, man. If you have not went to the website, man, kttv.com. Go get the book, y'all. We out here, woo, hustling. All right, so the biggest thing we're gonna look at today, let's get into a little bit of this heat check, man.
That song right there.
All right. Hey, man, look, just gotta kind of slow you into some of the worst things you can look at. All right, heat check. Let's go. Stock market map. All right, so today we had let's see here. Let me take off the banner. And the banner be in the way sometimes. I gotta figure this out, bro. All right. Bam. I guess we'll go there. Bam. We may as well just go there, right? All right. So for today, we're looking at our screen. Now, what we're doing is, people, this is called the S&P 500 heat check. When you are looking at stocks and you're saying, what do I want to know about what's going on in the market? This is where you can go. And so, hold on, wait a minute. I'm trying to get to it, y'all. Can you see it again?
Yeah.
Bam. There we go.
Oh, yeah.
All right. Now, when you get to the market, you say, okay, where is the money? And we see it on this heat map. If it's green like this is where the money is. If it's brown like this is where no money is. This is where they losing the money, right? But so we want to always be where the money is. And so if I came to this chart today, I say, okay, who had a good day? All of this light green would tell me Google had a good day. Tesla had a good day. Meta had a good Tesla. Wait a minute.
Oh.
Woo! Tesla bells. So Tesla had a good day today. Lilly was so still up 1%. So, but this heat check also over here. Who got the money? Financials. Oh my God. Chase. Dude, I remember I had this at 1:30, dude.
Oh.
But this is what we look at to say, okay, tomorrow, is this a trend that's going on, or is something taking place that we don't know about? And I told y'all, Uncle Jerome is in the building. So while all this looks good, this is not the time.
And KT, why don't you tell the people out there who Uncle Jerome is?
I apologize, y'all. If y'all don't know Uncle Jerome, we talking about the Fed chair himself, Mr. Jerome Powell, the Uncle Jerome.
And when
Uncle Jerome speaks, say, look, I'm just right now. I got a few losses that I've already dealt with that could happen because man, it could get ugly out here. So, but like I say, this is just a heat map. We want to look at it. Think about Walmart. Remember, I talked to y'all a little bit ago about Walmart. So we're still at $60. Don't miss the train, because when it get ready to go, when everything else is ugly, Walmart, Costco, all of these people are going to be holding their weight, right? Because regardless of how bad you're doing, when people laying off at Google and Meta, you go to Walmart and get that toilet paper. You know what I'm talking about? All right, so let's go back. Let's get out of there. And we'll go to our fear and greed index. That's another part. Hold up, wait a minute. So now I know where the market is going because I know what happened today. Now what I do is I come over and I go to my fear and greed index. And I don't know what's happening right there. All right. Greed, people. I told somebody today, when people are being fearful, be greedy. But when people are being greedy, you better be fearful. So I don't know how many weeks we've been, but if you can see it, 1 year ago, it was very scary out in these streets, right? But that's when you should have been coming up, because right now, these times, all those people who were buying over here, they doing pretty good right now, right? So 1 month ago, we were at 73. 1 week ago, we were at 64, right? So you think about 64, we're over here. So look at what's happening. Extreme greed. Once we start coming into here, it's about to get real. So previous close, we were at a 71 today. So look, people, things are getting rough. We don't know what's gonna happen. It could be a pullback coming because the market has been going up for like, man, what Jose, a few months?
Yeah.
Man, you could just jump in.
It's
Buy anything. Yeah. All right. So now we come over to our VIX. So let's see if I can get out of here and share that. All right. Okay, let's get to the VIX. All right. Now, so our VIX is telling us how afraid are people of spending their money. And so if we look at the VIX, the higher this number goes, the more people are afraid, or it's a scary market sentiment, right? Saying that people are kind of worried that a crash is coming. So let's see, let's look 5 days ago, 14, 1 month ago. So we've been kind of around the same area. And what we always say is if the VIX is low, but the fear and greed is high, that means people are spending that money, but they're not afraid that it's going to go down, right? Let's see here. Year to date, we only up. So yeah, look at this. Man, this is when it was the pandemic, right? And that was what, March? That was the pandemic, correct?
Mm-hmm.
So look at the VIX when people were scared before the crash of 2020. The VIX was all the way at 66, right? And so now we're at 14. But this was probably the day when they said, "Can't nobody go outside." Bam, right here. What happened? My God, we lost it all. And so over those years, people were still scared. But now, here we go back in 23, 24. So that's kind of when we were at a low. Last year during the summer, made a few dollars then. Picked back up a little bit toward the end of the year, getting ready for Christmas. And then we balanced all the way out to 14. So this is just, once again, another measure you can look at to see when people are afraid of spending that money. As long as this is low, people not afraid. So, but here, very afraid. All right, man. So anything you want to add for that heat check?
No, just make sure that as you guys look at that heat map, that you're thinking about positions that you may or may not have, and how you want to position yourself for when that fear hits. It's good, to have a little money on the side for when that does happen. But remember that when you look to see why things are red and green, have a plan on what you want to do as a result of it being red or green, and just don't get, if your money is put up for the long term, you don't have as much to worry about. But if you're doing short-term stuff, then you have to really think about what it is you're doing with that money and with these positions. So just keep that,
especially in the short term. Because I went into that Robinhood the other day and my stomach hurt from when we was losing all that money in 2020, man. That was crazy, man. Excuse me. But you live and you learn. That's why when we get into this platform probing, remember, we always gonna talk about paper trading, people. Don't start off with your own money. Go in and do some paper trades. All right, let's take a quick break. When we come back, we will jump into some platform probing. And that way I'll show you a few of the indicators I use before I get ready to make a purchase. Oh, wait a minute before we go. Check out the merch, right? Male educate, I'm gonna just do, bro. Oh, and we got if y'all have not, go to kttv.com. Make sure to get you some merch. We got books. We got everything, man. We got cable on everything. Get with us, man. We got subscriptions, y'all. Look, now before we jump in anything, I just want to do a public service announcement to say right now, Tesla is $173. It went down to $160. This is Tesla, people. I just want to tell y'all that And so right now, interest rates are high. People's not buying as many cars. EVs kind of slowed up. But all that's going to be over. And I'm just telling y'all ahead of time, Tesla is 173. Now, I'll talk a little bit more about that in this platform probing. Let's get it, baby. Man, I really got to get some like crunker intros, something, man. It's so relaxing on the way in, man. All right, this is what we'll talk about, people. Let's go over to platform probing, and while we're doing that, let's kind of go in and look at let's look at old Tessie here. Okay, whoo, that might be not a good example. I'm kind of lined up over here, but this is what I want you to look at. Tesla right now, 173. It went up $10.23 today. The reason it went up is because Tesla, well, one, it's been so beaten down. You think about coming way down here, right? Two, oh, wait a minute. What happened? What do we see, Jose?
Look at that. Look at that.
Look at the hammer candle. And what happened? And so, look, if you look at my,
and look at that.
we talked about some indicators. When did my thing tell me to buy? I got the hammer candle. So you see how it said go. And so a lot of the times when we said we're looking for a confirmation or we're looking for confluences, today would have been the perfect time that I would have got into a stock. So when we think about platform probing, I'm going to kind of look at some of the things that I use when I'm buying stocks, right? So I have my EMAs over here. I got my 8. And so this is my red line. What happens? No, I'm sorry, that's my blue line. My blue line. So the blue line is if the stock is going up, this blue line is going to be at the top, right? This red line is if the stock is going down, then this line will be at the top. And so a lot of these tell me when trends are taking place and a trend is about to happen. And I know you're saying, well, gosh, if it's that easy, then why are we not, what my boy say, driving Lamborghinis? So it is not that easy. This is one thing I look at, right? So I knew Tesla was beaten down, and I'm going to just walk you through how this would come all into play. So I also have something called VWAP, and VWAP is the volume weighted average price, right? And so I'll put a few notes out there. So it's a trading indicator that represents the average price of a security over a specified time period, right? And so it's commonly used by traders to identify potential support and resistance, which remember we'll talk about, and to gauge the intraday trend of a stock. So this is how it works. On a chart, the VWAP appears as a line that moves through. Can y'all see that? Hold on, wait a minute. All right, it's still sharing?
Yeah.
Okay. Okay, wait a minute. Hold up. Let me take this off. All right, here we go. Now, let me go back over to it. Okay, so on here, the VWAP is the line that goes through the stock, and it shows you once again where the trading, it's like a reference point for assessing like the average price of how much it's selling for and when is it going over time. So what I do is when I look at a stock, I go over here and I'm gonna say, where is the VWAP? And if you look, your red VWAP line is where people are selling. Your green VWAP line is where people are buying. And so if you can see, this is dancing off the VWAP all day, but it never broke below the VWAP. So that's my automatic VWAP. Here I use the anchored VWAP. So at the beginning of each each trading day, I go to this tab right here, not this one. I go to this one and I put anchored VWAP, and I'm gonna anchor that to the first candle of the day. So now I look over here and I say, okay, Tesla is coming back up. It's it's above the VWAP. I got a buy signal And I see here where my blue line is now crossing it back over the red line. So all three of these tell me buy. That's it, y'all. That's it. I mean, that's it. The thing is, it's not about, I guess it's not about how. It's about how, but when you got all these confluences going at the same time, it's about how long are you willing to wait for them. And so if this is your trade method, you wait for those, and then you go in and you get you some. Man, what you got to say about that, man?
The biggest thing that KT said was, how long are you willing to wait? Because even if you learned all of these methods, all of these strategies, or even if you had a very simple one that you created on your own, whether you looked at, your candlesticks, your VWAP, your RSI, or even if in your mind you're like old school and say, buy red, sell green. No matter what your strategy is, you have to know that how much time are you willing to wait? That's it. It's just like with them kids at school. They start cutting up.
Yeah.
How long are you willing to wait? And so if you are making that trade in a fashion in which you are day trading that stock, and you see what KT just lined up for you as a perfect entry point, that's half of the battle. So now you've waited, you were patient, you got in. Now the next part is, when do you get out? So no matter what anyone ever tells you when it comes to trading in the stock market, investing in the stock market, holding in the stock market, you have to have an entry strategy and an exit strategy. You never go in blind or nothing.
Let me go back over here. And so I want to kind of show a little bit of that too. So let's say, for instance, I'm right here. Still the same setup, right? Still the same setup. So I got my candles. That's kind of that's a big hammer right there. Like that's a little something starting to form. But you can kind of tell things is about to start jumping because here we go. Remember what I said? My selling pressure. Remember what we looked at earlier? That was a very small candle, and then it took off. So what happened here was it didn't form a hammer candle. This candle was even better because it was a full green. That tells me sellers have really showed up. The hammer candle says sellers are on their way. But this candle right here tells me that, buyers are on the way. This candle tells me buyers are in the building. And so you go down and you look, this tells me buyers are in the building. And then what happened? My red line came down. Boom, sell, buy. What happens right here? Boom, it's cross.
They're crossing.
I signal. Boom, I go up and I come. So now, this is a quick trade, right? But then when I look, I say, okay, look at my blue. It didn't keep going up. It started coming straight down. And so what I'm going to do right now? It's time to go. I might get out back here. I might get out because I know it's getting rough. So I'm going to start kind of saying, okay, maybe it's time to go. But I'm going to still hang around because this tells me my trend is still to the upside. But once I see this right here, because I'm already getting ready to submit, boom, I'm going to hit that button. I'm out of here. And then look where we're going. We're going here. So, boom, we got the same pattern. It can repeat, but I already made my little bread right there. So I'm going to hold tight right here. But then when I get here, now I'm understanding all this is confusion to me. This tells me this stock is either going to go up or it's going to go down. People just trying to make up their mind. Trying to make up their mind. And what happened? They made up their mind. And then it took a plunge. But you got to be ready for that, and you got to be able to understand what's about to happen. So these bars tell me a lot of amen. These bars tell me a lot of sellers have shown up. My EMA is crossing over, now tells me that the trend has now changed. And so now the question is, are you willing to take that ride? The only confluence that will be missing that we didn't talk about is price action, right? And so am I at a resistance point? So that's why you see all these lines, and we'll get into that later. But if you could tell right here at this line, I know it's about to be a problem somewhere. That's what I know. So then I already get ready because it touched this line here, went down, touched this line, went down, touched this line, flush. But remember what I told you. Once you learn that story, and you know what you're looking at. Come on, baby. Fast in session tonight.
Yeah, that's awesome, man, right there. That's awesome. And I want to go back to what we've been saying, what KT just said. We know, you should know, that nothing lasts forever, whether that's a downtrend or an uptrend. And so one of the biggest things that you have to get your mind to understand in this market is there are going to be days that are green, days that are red. There's going to be things, people, objects out there that manipulate this market, and there are signs of certain things. One of the things right now that we have to understand is that the market goes in cycles when it comes to whatever stock you're buying and whatever sector that stock belongs to. Nothing about a company ever stands out during a massive downtrend, and nothing about a company stands out during a massive uptrend. So you have to be able to ride those waves of when people are being greedy, people are being fearful, and you have to understand what you own. And so one of the things we've been talking about is this Tesla. People, a while back, Tesla was a $250 stock.
Yep.
If you are a long-term holder of Tesla, good for you. If you traded Tesla and rode it all the way to 250, good for you. If you never touched it, shame on you. And now what we are telling you is we may see a little bit more to the downside, but Tesla, if you know how to do long calls, and if you know how to get into options trading, if you don't watch one of our podcasts on that, I would sit back, buy me some January Tesla calls. Even if you paid $50 to $100 for them, I would start loading the boat on some Tesla calls. And if you can, and KT can attest to this, I am notorious for buying $80 calls.
$80
and turning them into
400 a piece.
800. So I am the king of patience when it comes to buying those calls that are 2 to 3 months out. I will hold them and I will sell them. I have gotten better at selling them.
Sell them
Recently. I'm also notorious for holding them, sometimes a little too long. However, I have made some significant gains on options that I pay under $100 for. So not everything has to be an expensive call, because if you look at some calls right now, you may end up buying a $400 call for Tesla for $80. Does it mean that it needs to hit 400? No, but whatever it does between now and then is a win for you. So just remember.
Yeah, last year, 300. What was this? April of No, March 28, 361. And then it came all the way back down here to 122. And just think about all the people who bought it when it came down here. I was one of them. I ain't gonna lie to you. Boom. And where did thing go? Back up to 200 and where we at? $280. I bought 100 of them down here, and then I rolled that thing up. Man, I'm so scared to file my taxes right now. Man, but look, y'all, we in the game. We in the game. So just wanted to kind of give y'all a little bit of update on that Tesla, kind of go through the platform to kind of show you what are some of the pieces that I use when I'm thinking about making a trade or buying a stock. Because like Jose say, you can't just go in and maneuver it every day. We got jobs, we work, and it's fast paced. So then how do you know what to buy, right? And how to hold it to make sure that you are going to go to the upside. And one foolproof way is by buying quality companies, right? So with Tesla falling down, if it would have been a change in the leadership of Tesla or they going bankrupt and something happened, then I would not be saying, look at Tesla. But the only thing that's happening is EVs are slowing down, interest rates are high, people are not buying as many cars. Yet today news came out that pushed Tesla stock $10 because they are raising the price on cars in Europe and they're raising the price here. The last piece that I would say that's keeping it so pushed down is a big percentage of their money comes in China. And so China has really been struggling with their economy. They're looking to be able to kind of boost some things from they still struggling from COVID. So once they get ready to boost and they stimulate that economy, and with Tesla is still the leader over there, and that is where such a big percentage of their money comes from, what's going to happen for earnings, people? To the moon, right? So the plan is buy the dip until the plan is not. That was just free game, macadamia game, right there, man. All right, Jose, man, we're finna get ready to close this thing out. We've been running it. I hope people were able to kind of get a little bit more of that information. We got the Instagram at the bottom. Make sure you get locked in with that. Any final words before we close this thing out, man?
Man, go look at that artificial intelligence crypto. Quick search on the Google. You'll get about 10 to 15 that pop up.
Look, I will say also, y'all, I think I'm about to start getting into these penny stocks. I had one that I bought 100. I mean, it was $1.46, and it went all the way up to $3.14. So you think about buying 1,000 of those at $1.46, and then the next day, what happens? I think I had to call. Look, I called Merrill Lynch like before school in the morning. Look, man, well, he got a problem. They say, sir, you got to use the extended hours tab. Hey, well, thank y'all. I'm trying to get to work. But the biggest piece, think about buying that $1.46, 1,000, and then the next day is up $2. So I got another one that I'm working on. If this one go right, next time I'm bringing it to the family. So we'll see what's happening, man. All right, y'all. I think that will do it for tonight. Big shouts out to everybody that tuned in. I hope that you were able to pull something. If not, please go back and watch this and kind of learn a little bit more about those candlesticks. The quickest way, almost the easiest, if you know what you're doing, to scale your finances is through the stock market, right? You think about if I compound and I get a 500 and I put that 500 over here, turn into 1,000. That's the quickest way to scale up your money to get your bag up. But you got to learn what you're doing. Once you learn what you're doing, I guarantee you it will make the outlook of life so different, man. So thank y'all for tuning in. Jose, we dropped another one on them. Shout out to you for the candlesticks. We will see y'all next week. This is KT for KTTV signing out. 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KTT.